Hi guys, welcome to SavvyMoneyShow. Me, your host Sean. Thank you for giving up your precious time for watching this video. I'm going to be talking about markets and what I've been buying and selling. Now, I said before about there being a rally. I do still think the market's overvalued. So I've been lucky enough, for those of you who've been following my channel, I sold a lot of my stocks to purchase a house, and I was lucky enough to get back in on this dip on my stocks. Now, the likes of Beam and that, and a lot of them I overbought, because Beam at $16, CRISPR at $30, Prime at $125, just screaming value, and then Telio at $6. You just cannot avoid buying them. AMD at $86, and I've done videos about these. How AMD is not because it's second in GPU, but how it's first in CPU. So go back and see them if you want. And SMCI at under 30 again, because the AI data center contracts with Nvidia, and it's even a value play, this level. But then the whole market had a run up. I trimmed some of my overbought positions to free up some cash, because I think this run isn't going to sustain itself. But I did buy a couple of new companies that I didn't have before, some hyper growth companies, Confluent, and I did a bit of a mix around my portfolios. I've got a couple of different portfolios. I have biotech portfolios, I have growth portfolios, I have spec portfolios, and I have dividend portfolios, value. They, as I said, I've trimmed all of those to buy a property, and so I added to those. Confluent had bad earnings. It's at a low $17 a share, and it missed its guidance and gave bad guidance, and it reported down. So its EPS beat analyst expectations. So I also like the fact that its current assets outweigh its total liabilities. It's a data streaming company, and I do like it. I spoke about SMCI. I was incredibly lucky with that. This last week it went quite high, and I trimmed some of it. It's come back down again, and I didn't get a high, didn't get a low, but I did very well out of it. I'm still holding 3 shares, and I averaged down again. I could sell it all and make a profit, but that's not what I'm planning to do, purely because the company is a PE of 14 and a forward PE of 9. Now we have Mobico, which I am picked up today. Now this was 90 pence a share when I did it before, and if you see, its market cap is 188 million. People are selling it off because it's sold its US bus company for more than double that, forward P of 2.5. I do think there's value here, and I do think it is worth. Price to sales 0.06. That makes sense because, you know, in the UK, you have Stansted Express, Gatwick Express. You have the National Express run these coaches, and price to book 1.05. I think this is way undervalued. But remember, there's risks involved with this as well. This is just priced for bankruptcy, in my opinion. It sold the bus company because it wanted to reduce its debt so it could meet its debt liabilities. And that's something don't forget to hit the like button, comment in the box below, and subscribe if you haven't already. And Qualcomm at 135. Now, no, it's not the bottom, but I don't need the bottom. I just think Qualcomm chips are in so many things, and it is 40 PE with a forward PE of 12. If you guys remember, I did a video before about Arch Daniels Midlands, and we bought some, it went up, and it's 48. I think it's one worth picking up. One I'm looking at, sorry, I'm all fingers and thumbs. That's the wrong one to say. I'm looking at Astera Labs. If it comes down a little bit more, I'll pick it up. Now, it's not cheap. Forward P of 58. Price to sales of 23. I have a rule that I don't buy anything with price to sales over 20. Price to book of 11. And my issue here is that you're paying a premium, but there's a reason you're paying a premium, and that is because it has higher profit margin than Nvidia, over 240% growth, 8% data centers has its chips in. Its competition is Broadcom and Marvel, obviously. 243% revenue growth, profit margin 76%. I'm looking to get it at somewhere between 39 to 60. I may have to bite the bullet and buy it around 69, but right now I want it to come down. See if it'll come down a bit. One we spoke about before when no one was talking about it, and then it skyrocketed and didn't come back down again until now. Hit $500 a share, and that is at Lovin. It was around below 60 when we first mentioned it, and the reason why, the free cash flow is 10x over the last 3 years. It has a revenue of $1 billion for the last quarter, whereas there's just over 500 million for the previous year. It deals with gaming ads primarily. The rule of 40 is 88. Now I'm looking at 200 or below. Again, I may have to bite the bullet, but right now I don't want to. It's 61. ads just, you know, they're not fluid. They're up against the likes of Google, Trade Desk, and, you know, forward P of 50. Again, price to sales at 20. It's expensive, but you've got the growth for that.
Sure.
Enphase, again, another company that I spoke about before. No one believed me when I said it would go to 80. It would go down to 80, and it did. Now it's a forward P of 18. I just remember these are ones that are on my watch list, not ones that I'm buying. And if they come down, come backwards a bit, we're looking at, of course, Google is always one on my watch list. However, I was buying it when it was at $88 a share, and now look at it. I find it hard to buy here when it was a P of 13. Now, people were saying it was going to go bankrupt back then, and as I said, it's like a future-proof ETF. I was asked about Apple. Am I buying any Apple? The answer is not yet, because no one knows about what's going to happen with this China-India thing. Trump's tariffs on China are extortionate, in my opinion. And Apple did exactly what I thought. They moved the factory outside of China. They wouldn't move it to America, obviously. Moved it to India. Now, I do not believe they're going to be making the iPhone in India. I believe what will happen is that the iPhone will still be made in China, and then finishing touches will be made in India, or even the boxing up will be done in India, and then it will be shipped by India to try and escape tariffs. You know, I've seen it before, how EV vehicles come from China to America, and then they're assembled in kit parts, and then they're assembled in America, and they bypass it that way. And considering that when you look at it, it has a forward P of 29, and no offense, Apple hasn't been innovating lately. I do just find it difficult to buy right now. Oh no. I do have a lot of companies to look at, but I'm interested in some oil right now. Oxy is one of them. One thing people are not talking about with Oxy is its carbon capture tech. That seems to have gone quiet since Biden has left the building. The other thing is the fact that Buffett was buying so many. Now, I do think this could be his next big acquisition. Let me know what you think in the comments box. And Devon Energy. I'm looking at both of these. I'm thinking about buying both of them. Let me know what you guys think, and see you in the next one.